Good morning, everybody, and welcome to the Flow Show. Kay isn't with us this morning, but
you have the next best thing, which is me.
There's no such thing as the next best thing, mate. We're all on an even par.
Nice. Very nice words. How are you doing, mate?
Yeah, not too bad, mate. You?
I'm very good. Thank you. Very good. Very, very good. Still
Good.
summer here, so I'm not complaining.
Oh, right. He's gone. Let's get Kay back. It has not stopped raining here for at least 2 weeks. It's a bit sunny today, but oh my God, we had another storm come through last night, woke me up, rain and everything. It's dreadful. I need to move to Greece. We should do a house swap. Are you doing that? House swap for the winter?
Yeah, we could do that. I have no problem with that. As long as you can take care of my kids and the school and everything, I'll come to UK.
Well. No conditions, mate. No conditions. Mind you, I could leave my kids, so it would be just about the same.
Cool.
Anyways.
Nice. Just to record. Yeah.
Yeah. I don't know if Greg is coming on or not. He said he might pop in. So if we see Greg, that'll be nice. Anyway, on with the show. Obviously, the US stuff, election stuff taking front and center stage. As you can see from the screen now, I have a picture of Yoda and the famous line, "Do or do not. There is no try." That's going to be applicable for some of the charts I'm going to look at in a bit. But quickly looking at the election results and pretty much heading to the stalemate as expected in the Senate. It's currently 49 to the Republicans, 48 to the Democrats. Democrats need 50. They need 51 for the majority, or any side needs 51 for the majority. But if the Dems get 50, then I think Kamala Harris has the tiebreaker, doesn't she? So she would swing things their way in that sense. In the House results, when it comes up, oh, it's not going to, there we go. Republicans are leading 435 seats up for grabs. So we've done 379 at the moment. So a few more to go. These are all going to be counted over the next days and as and when they come in. But at the moment, the Republicans are in the lead, but it is still pretty close. So on a step back look, if you like, it is looking a bit split, and that potentially we're going to be hung parliaments all round, if or stalemates, or whatever it's called in the US, is looking the case for that. This is going to be, obviously, as I say, finally decided over the next few days. Lame duck, thank you, Brian. That's what it's called over there. So we need to see what happens. The market is a bit all over the shop with it. I don't think it really knows what to make of it. Dollar's been up, dollar's been down, yields have been all over the place. So it's really a bit uncertain in my mind what the outcome is from here. But while we're trading it, the market's going to trade everything else. So there you can see yields down, yields up. It's all a bit of a flip-flop situation. What are you making of the election so far, Stel?
Well, I think the House was always pretty much a given that the Republicans are going to win that, and it looks like it's going that way. Again, polls had the Senate roughly 50-50, and it is roughly 50-50. But I think at the end of the day, there's going to be there's not going to be a sweep from the Democrats, that's for sure. And so I don't see a scenario where this result is going to be good for the US or positive for the dollar. Let me put it that way, because we're looking at the markets. Now, Steve was yesterday, he disagreed. He said the less freedom governments have to do stuff and to push through laws and measures, the better for the country and the better for the currency. Kind of has a point, but in the short term, I think uncertainty and difficulty in general is going to be bad for the dollar. That's what I think. But I have a feeling that Republicans are going to win both the Senate and the House. Yeah. And that's going to make things very interesting, because we know Trump is making an announcement next week, and it could pave the way for him to come back in power, which would be interesting.
Yeah, very much so. Very much so. Okay, so we'll get into the pricey stuff in a moment. So let's just go through some of the other news. Small bits of data out of Japan. As mentioned, not a lot of data this week at all until the CPI in the US tomorrow. The Japanese Tankan survey, which is for large manufacturers on one side, that dropped to 2 versus 5 prior. On the non-manufacturing side, though, large non-manufacturing companies, that rose to 20 versus 15. So a bit of a mismatch again between sort of the services and manufacturing. One of the economic ministers from the government said there's no plan for a third extra budget. So that might be one of those situations. Nothing is real until it's been officially denied. But obviously, we've just spent months waffling on about their second extra budget. Apparently, there's not going to be a third one. In China, there's mass testing for the Guangzhou city as COVID cases rise there. There are a bit of easing going on in some of the cities, but otherwise COVID cases are still on the rise, still looking a problem there. We keep talking about China reopening. We've got to remember that they are still keeping things pretty contained. So things like factories and that are running. It's not wholesale shutdowns of ports and things like that as they were before. There are still issues at things like Foxconn, but generally, you know, China is open in terms of producing goods, but they just keep having these lockdowns in the civilian areas more so than things like ports and that. They have got a better handle on that sort of thing. So it's not really affecting that side of it wholesale. But China being China, it doesn't take much for them to stroll in and lock everything down. So that needs to be watched further through the winter. Over to the RBA, and Bullock was out saying that there's signs that wage growth is picking up and that they would raise faster if they thought inflation was not coming back down. Now, this is, you know, a bit hawkish on top of a slowing of hikes in Australia. It's not going to look good for some of these banks if they're forced to hike faster and in large increments after slowing down. You know, the RBA have been one of the worst banks for getting caught with their pants down. It was only last year, beginning of this year, they were still pumping the won't hike until 2024 message, and they've been forced to eat those words. But if they are forced to suddenly ramp up hikes to bigger sizes again, it's not a good look for them. And at the moment, it's all about central bank credibility. And speaking of shot to shit credibility, Bank of England's Peel had an appearance in Treasury Select Committee yesterday, and just picking out a couple of his comments, he said the second round inflation is more likely with the tight labour market that we've currently got. So in essence, he's potentially seeing another round of inflation to come. Now, as you know, I've been pointing out that inflation is not dropping in the UK, and this is happening among the message, or from the message from the Bank of England, that rates might not go as high as the market expects, which I'm going to continue to call bollocks on, that we will see rates at least 5% probably in the next 3 to 6 months. And they have, as I say, Peel is saying pretty much, not saying the same thing, but he's giving reasons why rates might continue higher than what the Bank of England expect now. But there's been some good news on, remember that thing Brexit? Well, apparently, according to reports, the UK and EU are close to a breakthrough on goods moving to and from Northern Ireland. That comes from Bloomberg. Take that with the usual pinch of salt. The ECB had one of their consumer surveys out on inflation, and expectations are up a bit, with consumers seeing one-year inflation at 5.1%, obviously well above the ECB target. 3-year inflation seen at 3%, also staying well above the ECB's target, which is close to but below 2%. Germany is planning to double net debt in 2023. The fiscally responsible Germans planning to, well, more than double their debt next year, again, according to Bloomberg. I don't know if that's been denied as of yet. That was out yesterday afternoon. The ECB has said, the EU has said to be planning Eurobonds for UK funds. Eurobonds is a big hot topic in the EU because it's been something that's been touted for a while, Eurobonds replacing individual government bonds. But obviously there's lots of arguments around that. Where do you pick borrowing rates? If you've got Italy 10 years at 4 or 5% and Germany's at 2%, how do you set the middle ground? But anyway, the talk will not die down, and that's something that potentially they're planning to raise funds for Ukraine. And while we're on the subject of Bloomberg headlines, yesterday they said that Russia was to resume nuclear talks, and then this morning Russia said it's too early to talk about a dialogue with the US on extending the New START treaty, which is part of, or one part of, talks over arms. Also out from the US, FedEx, one of the hotly watched stocks and earnings reports, were out, and the CFO said that they have cut flights and parked planes because demand has dropped. Now, to say they are a bit of a bellwether for activity, being a big freight company. They're in the hot seat for how goods are moving around the world. So it's not good news for activity that they're cutting flights and parking up planes. That's all I've got at the moment on the headline front. Stel, you got anything you've seen overnight you wanna chuck in the mix?
Sorry, I switched up for about a minute. Did you talk about the US-China CPI? Because that was important.
Right, we're back. We're all back.
Okay, we're back. I just wanted to ask, did you talk about the Chinese CPI, which was quite important, I think?
No, I was going to, but if you want to take it, mate, feel free.
Yeah, no problem. I mean, you're showing it. I think this is we take these numbers with a pinch of salt always, but this is I think a very big number, because we're seeing a big slowdown in year on year. So from 2.8 to 2.1, it was expected to go down, but not as much. So this is kind of going in line with some other readings we're seeing at the moment globally. We're seeing some countries, I remember Norway's CPI went down. There are some countries which are seeing slowdown, and China obviously is a huge part of the global economy. So this is something that central banks are going to be looking at quite closely. And I think that's this is definitely a risk on data point that we saw this morning, but otherwise it's been pretty quiet, and it is, like you said, it's very quiet until CPI tomorrow, right? Is it tomorrow? It is tomorrow.
Yeah, tomorrow, mate.
Yeah. So yeah, no, that's the only thing I just wanted to mention. Otherwise, I think you have it all. And I mean, we also have to mention obviously the FTX slash Binance malarkey. Which did you talk about that at all?
No, I hadn't. I was going to have a quick look at some of the cryptos there, because that was a bit of fun and games yesterday, wasn't it?
There was a really nice thread. I'm going to get the link. Somebody on Twitter wrote a really nice thread about it. Let me find it. I have it here. Hold on. Where is it? Here it is. Okay, copy. I'll put on the chat box. Basically, looking at it from my perspective, it looks like this was a perfect setup for Binance to buy out one of their biggest, if not their biggest competitor. So what Binance did is they said, right, we're going to sell all our FTT coins, which is the FTX coin, which was something like $500 million worth or whatever it was. That brings huge liquidity issues to FTX. They stopped client withdrawals, big problems. And then, with clearly their valuation going down massively within a day, they just stepped in and they said, yeah, we'll buy you out if you want. So I don't know. It seems like a real genius move from the Binance guys, Chinese guy. But the problem with this now, that's happened, is that we are seeing that the whole crypto sphere, yes, there are advantages and there are reasons why people use cryptos or believe in them, but it just shows that from one day to the next, you can have some kind of event where things, you know, lose 25, 30, 40% of the value. I mean, that's what scares me with cryptos. And that's why we saw other coins collapse, and even, you know, even the big established ones. You know, Ethereum is down what, 20% in 2 days, which is shocking. So you know, it was a chain reaction that took everything with it, and unfortunately, we have been very close to this breakdown point in Bitcoin, like you are showing now, and we are there. And it takes a very, very courageous person to get long here. You know, your risk is actually very well defined. You know that if we break below 17.4, what was the low? 17.5. You know that this is the end. The problem is if you're long here and you put a stop at, you know, 17,400, and it gets triggered, where do you get filled? You know, you might get your first part of your position. Obviously, if you have a very small position, you don't care, you're going to get filled straight away. But if you have any kind of decent position, you get filled some at 17.4, then the rest at, you know, 16.7 or whatever. And that's percentage-wise, that's huge, huge. So just be careful with these things, because it's one thing to have a level in your system and the other thing to get filled there. You know, I've seen horror stories in liquid markets like short sterling futures or Eurodollar futures that I used to market make. I had big size there, but you know, you put your stop, you put it there, and then suddenly you're filled at a completely different level, and you're like, oh, I'm down, you know, 300 grand on that. Oh, what happened? You know, so so you have to be careful. You have to be really careful.
I mean, I think the worry here is that we have tagged a new low. You know, beating that June low, and it looks like we're in the process of breaking now, and that could be very significant. Where's your mate Michael Saylor's next payment?
I don't know. I really don't know. They clearly hanging on so far, but at some point, because it's a publicly traded company, they have debt. They've said that they can pledge more cryptos as collateral if Bitcoin keeps dropping, but there has to be a level where they just have to sell everything. And, you know, $1 billion question, where is that level? I don't know it, but I'm betting he's not sleeping very well these days.
No, I haven't seen him much on Twitter. I haven't looked at him, so I'll have to have a little look and see what he's up to, see if he's
and don't get me wrong, I don't like it when, you know, people lose money or they make a decision that doesn't go well, but this guy has been advertising cryptos or Bitcoin just like it's the gospel. You know, this is God. He says Bitcoin is higher than God. That I cannot accept. Or other people who were irresponsibly long Ethereum, or, you know, all that stuff. I don't get that. You're taking with you people who don't understand potentially what they're doing. You're taking them with you and you're taking them down. So this for me is unacceptable. Absolutely unacceptable.
Absolutely. And that's what we all fight against here at ForexAnalytix. You know, don't fight the narrative. You know, give people the truth how to trade and what the risks are. But anyway, let's not give too much airtime to that plum. Let's still have a look at the charts in a moment. I want to take us back to Yoda and just to go over some of the things I've been looking at and I've been trading. Looking at Aussie dollar, just want to show you this because this is what I was looking at yesterday. I took a break long as we broke 65 and another bit as we broke into the zone at 65.20. I got some of it off 65.30 when we first were struggling to break out the top of this zone here. What I look for in price action, and particularly break trades, is when you get action like this, where you get, you know, decent resistance of a level of an area, then you get the break. The first thing I want to see is that broken level holder support. That didn't happen yesterday. So we got the break up, even broke through the zone. I suspected we needed to clear out 50. We couldn't do that significantly. So then we came back pretty sharply and we didn't hold this level. Nudged under. I didn't get stopped out in that move, fortunately. Then we got back above. Then that's what I want to see. I want to see the broken level held as support. But then what did we move into? We moved into a situation where the zone became resistance again. So a bit of a tight range, 40 odd pips. Something's got to give. We either break out and then bust this high, or we don't, and we break this support and go back in the box. And that's what happened. So I've been stopped out on the balance of that particular break trade 65. So I've still got my core longs, which I'm happy to sit on, but it's not good news at the moment. We're going back in the box for Aussie dollar. Back to Yoda. We tried. You know, or do not. There is no try. So this one is marked down as a failure again in that zone, in my opinion. Where can we go from here? We got obviously some minor lines on the chart, but it's really going to be down to probably the 64s. We need to be looking at as the immediate important level. Under there, then we're coming back down to these sort of areas. Doesn't mean we've negated the break. You know, we could get a quick return above it, then it becomes a bit wishy-washy around the 65, 64.80s. But that zone is showing how important it is, and as you can see, all the way back, you can see how important a zone. It's been on my chart for months. You know, it really is a big area, really big area there. Another pair that's, or another asset that's done the same is gold. It's run right up into a moving average. I was highlighting this yesterday. We got the 100 DMA. It held yesterday. It's holding this morning. If we cannot get above here, it's again, do or do not. If we can't break up above this area, then we're likely to have a test down towards this zone again. If we hold that as support, all well and good, then we have a bit of a battle between these two levels. If we fall through pretty quickly, this is going to be another one that's going to go back in the box. Then we're likely to see it become resistance again. Then we're potentially going to be playing with this inter range here, 1660s, 1640s, and then down towards the strong triple bottom down there. So when you're trading this sort of stuff, and you know, I've been long from 1618, I knocked some out last night up on these highs. You get to these areas where you've got to ask a question: can we go any higher? These, you know, when we got up here, I was taking profit. When we got through here, I took some profit, because you've always got to ask the question: where is the next point where my trade is going to run into trouble? This is it up here. So this is becoming the next key area up in the 17, call it 17, 18, 17, 25, 30s. We need to get through that zone. Then we have a chance of pushing up further. If we can't, we're coming all the way back down again. And the last one I want to look at quickly before I bring Stel in is dollar yen. Another one where we've got a big level up coming and a decision needs to be made. This 144.90, 145.10-ish area. This was a big break point on the way up. So again, a bit similar to what we're looking at in Aussie dollar. You've got strong resistance points. Yep, we had a little breakout, then resistance again, all the way through. Good period of time. We've had the break. We've had tests of support. It's confirmed as support. It's doing so again. Is it going to hold or is it going to break? If it holds, then potentially we're setting up for an extended period of consolidation, probably from 145, I would say up to 149s as maybe a top end. If we can't hold this level, if we break this level, we could be very low 144s or even worse pretty quickly. I wouldn't be surprised to see a move through 144, maybe down to this fib, maybe 143.50, that sort of area pretty quickly on a break. I've already heard talk that there's stops through this zone. So if we get through 90, that's where we could see an acceleration. This is another one I'm short. I've been short from the 148s, only really small, didn't get to add to the position, but I wanted a longer term short in this one. Didn't really give me an opportunity to add back in, and I was looking at the 150s, maybe being a bit greedy. I don't see any reason to change my bias on the dollar generally at the moment, but the techs have got to play the game. So if we get a move, I haven't taken any more profit down here. I'm looking at in this zone to maybe take some profit. Then we'll see where it goes, and maybe I'll start bringing my stops down. But anyway, that's what I wanted to look at quickly, just in terms of, you know, these big levels that we've got up and coming and how you trade these breaks and that sort of thing. On that note, I would hand it over to Stel for that.
Yes, sir. By the way, you talked about being greedy. you mentioned Yoda before. I'm going to mention Gordon Gekko. Greed is good.
Oh, okay.
Yeah, sometimes.
Before you start, mate, just wanted to. A couple of people said something in the room. Where was we going back? RA saying Erdo's men lost their election races. I know there's election coming up there. I know he needs to get a bit of support from other parties, I think. I don't know anything about that, so if you can elaborate on that, that would be much appreciated. And Surab saying, would you be taking any dollar positions today before CPI? Depends. It'd have to be something really choosy, and I'd only really be looking to scalp rather than hold anything. Otherwise, I'll just keep the positions I've already got because they're long termers and they're not going to be overly affected by the news today. But if you are looking to trade, depending on how you're setting yourself up, if you're looking for a quick scalp, that sort of thing off the levels, like if you get a test of 145 and you want to have a quick go in dollar yen, do so. Just know your risk. You know you have to make a decision before CPI tomorrow. And on that, over to you, mate.
Thank you, sir. So for people who know me, I always like to take a step back and look at the big picture and, where are we in terms of global markets, rates, central banks? We're at the point where we're still hiking in pretty much every major central bank, but we are now starting to look for reasons to not to stop, but to slow the pace. And the main focus obviously being with the Fed. So, what can we expect? What's happening? What were we predicting? From what I remember, Fed fund futures are still pricing just above 5% as a terminal rate, which has dangers. The Fed has told us repeatedly that they're committed to fighting inflation, and the last Fed meeting was still relatively hawkish in the most part. But the market nevertheless is looking for a turn at some point. I've said for a while now that I think yields are driving everything. So basically central banks driving everything. And I look at 10-year US, first thing I wake up in the morning, and that's where I start. And at the moment, it looks like the 10-year yield is still within this ascending channel, whatever you want to call it. It's a very orderly rise. We are now seeing kind of hesitation. I think the most likely scenario is that we do have one final push higher in yields, and that's going to be terminal. The question is, what will make the Fed turn? And I think the most likely answer is a slowing inflation. So when are we going to see a slowing inflation? I've said for a while now that I think it's going to be first quarter of 2023 for many reasons. The biggest one being that the way it's calculated, we compare from a year earlier, and the rate of change of inflation early 2022 was really the biggest jump we've seen. So we go for us to have the same level of inflation or anywhere near that, we're going to have to see an equivalent increase over what we were seeing last year, which is going to be extraordinary. I really don't see this happening. So obviously anything can happen. I'm just talking about probabilities here. And I think Q1 2023, we're going to see US inflation start to drop quite quickly. I think we can easily see something like 4 or 5%, and that's going to definitely year on year. And that's going to definitely give the Fed enough reason to say, look, there's a lag from what we do to what actually happens in the economy. They've already acknowledged that. They talked about this on the previous FOMC. They said we have to see what happens given the lag that exists. And let's face it, the only indicators that are still looking strong are the lagging ones. So we're seeing inflation and employment still doing relatively okay, but this is going to be joining the leading indicators, PMIs. Remember Chicago PMI, huge miss, ISM, non-manufacturing, big miss as well. All this is going to come through to the economy. And bottom line is the average person, I'm not talking about the 1%, the average person is seeing their disposable income dwindle dramatically. And that's going to eventually feed through to the economy. We're also seeing companies announcing layoffs. this is all going to come. So I personally think that there's going to be some kind of good news from the Ukraine front as well within the next, I don't know, 3 to 6 months. And that's going to be a huge relief for markets as well. So what I'm trying to say now is I think there's still one final push higher in yields. I think actually you can't see it on this chart, but anyway, there is I think we are probably going to get a slightly more hawkish Fed going forward than expected. Maybe the CPI print is going to be strong tomorrow. I think the chances are that it's going to be a little bit stronger than expected. We're expecting 8%. I think it's probably going to be a couple of tenths higher. And that's going to make markets realize that the Fed's going to be a little bit later, a little bit more late to turn. So I think we probably get one more push higher in yields, which means one more push lower in risk. And then it's all over for me. So that's my big picture view. Obviously, I could be wrong. I think that a drop below these lows here, which is what 390, let's call it 390 in 10-year US, is going to be very important. It's gonna mark a new low. A lower low, so that's probably going to mean that something has changed in the global environment, and that the Fed pivot is coming sooner rather than later, as Steve would say. So that's my view on yield. So by extension, I think that stocks probably have one more leg lower. I've been talking about 3,300 in the S&P, which was the old pre-COVID high. I've been talking about that for months and months. I think we were in the mid 4,000s or something like that when I was talking about that. We're getting there. Maybe you won't reach there, but I think there is one more low in risk. So I wouldn't be hasty in calling this a bottom. That's it. We're going to the moon. No, I think there's probably going to be one more flush lower. So with risk, then go the other risk assets that follow. So we have gold. Ryan talked about that. Gold is very interesting because we had been talking about 1680 to 1690 for ages. It had been support, and it's now been broken. There was the 200 DMA. I can't remember which DMA we had that Ryan showed, but 100 DMA or something like that. But
I think it was the 50. Well, I need to double check.
Anyway,
now.
it doesn't matter. It doesn't matter. There is a DMA here, but look at these candles. Okay, there's a huge upside candle, small correction, another huge upside candle. You want to see bigger corrections than this if this is going to be a reversal towards 1680. So for the moment, I am not. I don't think this is in any way bearish for metals. Obviously, a strong CPI tomorrow is going to bring pressure, downward pressure, but I don't think we're seeing anything bearish yet. If anything, this little correction is absolutely tiny. So I think gold is broken out, no doubt about that, above the 1680 level. Could we get a retest? Yes, we could. That could actually be a good sign if we get the retest and go higher again. Silver has also broken out. We did talk about 2150. I got a little bit excited today, and for these people who have been following me, I have a admittedly very small, but it is a long from way below, and I added just a little bit today at 2150. So that's a little bit underwater, but I want to start accumulating more and more, and a convincing break above 2150, probably on a daily or even better on a weekly basis, is going to make me start to pile in more. I have less than a quarter of the position I want to have, but I'm slowly adding. And I'm not going all in yet because I still fear that there is this move higher in yields and lower in risk assets, and that's going to take gold and silver with it. So I'm still being patient, but I'm slowly accumulating. Now, talking about risk assets, let's talk about the big high beta risk proxy, which is Bitcoin and Ethereum. And Ryan mentioned them before. We are on the precipice. We are right on the bottom here, and if you scroll out a little bit, the next level, I mean, really, it is 12 to 14K. So if we see a break below, it's not going to look good. I think there's going to be a proper wave down towards 12 to 14K. So be very careful of that if you're long. If you're long, as I said before, you have a very clear view of where your stop should be. The question is, how do you get filled? So be very careful with that in terms of sizing. Ethereum is similar, actually slightly better technically because it's not quite at the lows, but you can bet that if or when Bitcoin breaks, Ethereum is going to break ×2. So it just doesn't look good to me at the moment. Currency-wise, the euro dollar is, well, it was on a very well-defined descending channel. It did break. It kind of retested a little bit on the inside as well. It's never perfect, but this looks constructive. But as I said before, if we do see strong CPI, that means we're going to see a strong dollar. So there's a high chance we might try to get back inside that. But as with metals, I think these are probably not bad levels to start accumulating longs. If you're looking at a medium-term trade, not a scalp, not a day trade, not a weekly trade, I think these are good levels. And I'm going to start looking at that, but I'm not touching it just yet. USD MEX is one I'm definitely looking at. I talked about this yesterday on the morning edge and on Face, I think. Look at these lows. I mean, this is huge. So this range between these lows were 54, these were 42. So the way I'm going to play it is if we break, but I need to see the break below 1942. I'm going to take a short. I'm going to put my stop above 1942, probably 45, 46, giving some breathing room. But if that breaks, I think we're getting to the 18.5s relatively quickly. And this is the kind of high probability trade where if we do break this 42 level, I think we're going to get to like 1910, 1915 very quickly. You adjust your stops and kind of, make it then a free trade, or, even maybe take some profits and then run the rest. So I like this kind of break because it's technically going to be very, very strong, but I'm not playing it yet. Actually, Blake, from what I remember, was playing along here yesterday when we were trading in the 45s. So he's done well on that. But I'm sure he's placed his stop close to these lows, so just below probably. But otherwise, currency-wise, it's not a clear picture. Euro pound is right in the middle of this, this area between the 90s and the 83s. So I'm not touching that. Cable, again, probably not a bad place to start accumulating longs if you like that, but you have to be, your leverage and your sizing has to be, you have to be prepared that this might go in your face for a little bit. Still not huge amounts of reasons to be bullish the pound, but it will come. So, I'm watching that. I'm definitely watching that, and I'm not, I haven't got a position yet, but I definitely want to. Yen, I'm not touching. Norway, I want to sell dollar Norway. I've said this before. I was an idiot and didn't do so a few weeks ago. I was talking about 1060, and I kind of missed that. But when it got here, yeah. But anyway, I'm going to be looking at these levels. I always want to be a seller of dollar Norway, based on fundamentals, and but the dollar drives this pair massively. So I want to be careful with my entry points because look at these moves. I mean, these are double-digit percentage moves within a couple of sessions, or a couple of weeks. So this is it's a very volatile pair. Yeah, so that's all I had to show. I don't have much more. We wait for CPI tomorrow, and hope for the best.
Yeah, always away, mate. Always away. Thank you very much for sharing all those. I just want to share a couple more myself, so I shall take that back from Stel. Euro sterling, yeah, I've had a little scalp up at the big figure just before the show started. I don't know what happened on Monday with this move. I don't know what's happening today with this move, but just purely playing levels and okay. Got nice and long down here. into the 87s yesterday, so he's had a nice run up there. We're just playing the big figure tennis at the moment, I think, for want of any news or items going on. So I'm a little short up here just for a scout play. Dollar CAD was one that I've been speaking about for a while, this 135 level, and I was looking at it for a break trade. I did have a short last week off the 135 that got stopped out in the end, but this is not the price action you want on a break trade. That's the thing with trading. You learn the experience. Sometimes FX can be really complex, sometimes it can be simple. And when you're trading things like big levels, it's really only four things can really happen. It holds, like in this case, it would hold and bounce. It breaks and goes further through. It wishy-washes about before making a decisive move, or it does none of the others, and you just don't know what's going on. So this one was one of those ones where it didn't know whether it wanted to break or not. We kept bouncing, kept going under, so and so. So what you have to then do is set your sights a bit wider, look at the price action in itself. So if 135 is becoming washed out, then you look at the prior lows and you look at what highs are coming after that, because that sets your new boundaries. So 135 becomes non-existent, if you like, in some aspects. You look at it now here, right? If we're going to resolve this 135 area, we've got to get above 135.50. If we're going to resolve to the downside, we need to get below these lows. And so your boundaries widen on what you need to look at. So here we had, again, messing around 135, and then we had the break under. Now, what does it do after that? Well, now it's reassessing itself against not 135, but against the former levels. So now, if you miss this break like I did, what are you looking for? You're looking for confirmation of the broken areas to maybe give yourself conviction to get into a short, and then maybe push for the downside. Now, I haven't traded this because this is the move I was looking for when looking to set up for a short stop or a sell stop. I just didn't like the action that was happening around this area when it started. Hence why I didn't drop in a sell stop right at that point. I just, again, experience. It wasn't conducive to seeing a break, and that's not what happened. We got a small move under, failure, another small move under. That's not what I want to see. If I want to see a break, I want to see it go boom, do that. I want to see it do what it did here. That's the move I'm looking for on a break trade. So I didn't feel it here. That's what happened with a move there. And you learn this from experience. As I say, these price moves, they happen the same. The patterns are the same time and time again. You just need to learn to identify what pattern is likely to happen. Is it a straight break? Is it a wishy-washy break? Is it an uncertain, don't know what we're going to do yet break? And then you know how to trade it. Yeah, I missed this one. Okay, next time I may not. We'll see what happens with the next setup. So I hope that gives you a bit of insight in how you look at trading things like breaks, because it is something that a lot of traders don't have in their armory. They look at levels, they lean on levels. They don't necessarily look at what happens if that level breaks for a trade entry. And it's something, markets go two ways. Don't be one-sided on everything. Don't be, we're falling to a level, I have to buy it and that's it, nothing else. Or we're rising to a level, I have to sell it on that level, nothing else. Look at what happens on the other side. If your level doesn't hold, what are you going to do? There's opportunities there, and you use those opportunities, particularly against big, strong, well-tested levels. That's what you need to look at. So when you get levels like this, you set yourself up for a potential break, because the breaks are going to give you good rewards. They're going to give you decent percentage returns. You don't get that on a 15-minute chart trading in amongst all this mess here. You don't get the big rewards there. That's what you need to look at. That's where you bring the big opportunities. And as Brand says, yeah, so the 135 becomes a bit of a zone now. We may have a zone 135, 134, 67, 70. That may become the resistance zone now. It may move above and that becomes the resistance zone. Who knows? Price action is king. It'll tell you the story and what it wants to do. Anyway, that's we'll call that a day for today. I hope we've given you some good insight. Obviously, CPI day tomorrow, and no doubt more election news to chug through. So until then, have a great day. There's not a lot on the calendar today, just looking NBA up in about 45 minutes. But that's it. So Mexican CPI and PPI. So keep an eye on that if you trade in the mix. RA, I'm in Erdo's men for US in it. Ah, gotcha. Thanks, RA. Anyway, that's it for today. Thank you very much, Stel, for your contribution. I'm sure.
Thank you, Ryan.
You'll be around tomorrow, I'm sure, as well.
Yes, I will. Yeah, of course.
Good stuff. Always a pleasure to have you on. Have a great day, everyone. We'll see you tomorrow.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.